Good morning, all you magnificent melon heads of the world, and happy Friday, everybody. Today is June 21st, 2024. And the top story this morning is the auto industry, or what's left of the auto industry in the U.S. We got earnings from CarMax this morning, and what a mess. Now, CarMax stock, the last I looked, was actually up a fraction of 1%. It was up a couple of percent a few minutes ago. It's given up some of those gains. But forget the stock performance for a second, because the market was expecting even worse, and I guess it was a little bit better than total catastrophe. CarMax Q1 profit was down 33%. All right, it's one of the biggest car dealerships in the country, and their earnings dropped by a third. And we're going to get into this article on Market Watch about some of the data that was in CarMax earnings. And guys, it was bad. Almost every category was bad. Revenue was down. Same store unit sales is down. Price per unit is down. Wholesale prices per unit is down. Revenue was down. Everything was down. And the real kicker, and the one that just like really completes the set, you know, the cherry on top of that's ice cream sundae of bad, was that CarMax is getting into non-prime asset-backed securities in order to offset some of the decline in their earnings. And by the way, if you're wondering what a non-prime asset-backed security is, well, that sounds an awful lot like subprime, doesn't it? And you'd be forgiven for thinking that, because it's exactly the same thing. And I guess, well, CarMax spent a couple of $1,000s to put a focus group together, and subprime bought back bad juju vibes from 2008, and they said, okay, we need a new word. Let's use non-prime. Oh, everybody suddenly feels better about it. So we're calling it something different, totally different, even though it's exactly the same thing. They're desperate because prices are down and sales are down because rising interest rates and the cost of inflation has killed car buyers. And so what's CarMax doing? They're lowering their standards for lending to people to try to bring in new buyers who can't afford the cars. And well, they're not going to keep that loan on their books, are they? So they're packaging those loans up into bonds, asset-backed securities, and they're selling them probably to pension funds. There it is, folks. We officially learned nothing from the great financial crisis. Nothing. That's out of CarMax this morning. We're going to get into some of the charts and some of the data showing just how bad the used car market is. Now, the new car market is lagging a little bit. New car prices are starting to come down, but used car prices just absolutely in free fall here. Now, also going on this morning, there's a lot of worry. I've seen a lot of talk on Twitter and even in the mainstream press this morning. A lot of people are starting to talk about options expiration, which happens this afternoon. There's a lot of people worrying about a volatility spike in the last hour of trading or so, which you'll be able to watch in real time on my afternoon live stream at 3:15 p.m. Eastern time today. Shameless self-promotion. But today is triple witching. It's a I don't know about a big event. We hear this on pretty much a quarterly basis. People say, oh, we have this, the moons are aligning and this expires and this expires and this expires all at the same time. And it could create this waterfall of selling. And we hear this a lot. And we've talked about it on this channel before, and none of it has ever really resulted in a big spike in volatility like people have feared. And once again, we're talking about that this morning. So I don't want to be too fuddy here, too much of the fear. However, comma, asterisk, all that stuff. However, there are some unique properties of this event today. First of all, this market is run by drunken idiots who are YOLO buying calls in single stocks, namely the AI stock, the big bubbly one. You know the one I'm talking about. And, well, what happens, say I buy a call option. When you buy a call option, somebody sells that call option to you. That's a market maker. He sells you that call option. Now, that market maker doesn't just sit there with a lingering. He's actually taken out a short position, right? If he sold you a call, the market maker is short that company, say NVIDIA. So what does the market maker do? He goes into the stock market and he buys the 100 shares to offset his risk, to hedge against the call that he just showed you. So now the market maker's position is net neutral. He collects a little fee for the service and he can go on. He doesn't really care if the stock goes up or down because he's hedged either way. Now, because we have so many people have piled into calls, it's something like an 11-to-1 volume of calls expiring today versus puts expiring today. That's according to that Bloomberg article anyway. You've got, when the market makers are done with those positions, when those calls expire, well, the market maker doesn't need to maintain that hedge anymore. And there's about $5.5 trillion. I've seen $4.5 trillion. The estimates vary, but there's trillions of dollars worth of underlying stock in options that's expiring today. And well, the market makers don't need to hold those shares on their books anymore after those calls expire, so maybe they're going to sell them. And that's what people are worried about. People are worried about a wave of selling at the end of the day today in that last hour, that triple witching hour. And look, I don't know if this is going to happen or not. Enough people talking about it and enough people worrying about it can create those conditions. And so we're going to report on it a little bit. We're going to get into that article. Again, I want to temper the enthusiasm here. I'm not saying, oh my God, there's going to be a market crash this afternoon. Just that conditions for a spike in volatility created by a very lopsided long market expiring could drive some selling this afternoon. And if it picks up steam, well, we're already in a market bubble, so it won't take a lot to push that bubble off the edge or pop that bubble. So it's worth keeping an eye on. Also, we got some comments yesterday from SoftBank CEO Masa-san, and he's getting a little existential over there. I don't know what's going on in Japan. Somebody want to check in on Masa-san. First of all, he's making one of the more ridiculous statements I've ever heard, which, how to tell if an investment banker is getting desperate. If he makes statements like, within 5 to 10 years, artificial generative intelligence is going to be 10,000 times as smart as people. Okay, numbers some guy just grabbed out of his rear end for 1,000, Alex. He's just out there making these bold, grandiose statements that have no basis in reality. 10,000 times smarter than people in 10 years. Okay, it can't count to 3 right now. It tells you to glue your pizza together right now. It says there's 2 R's in strawberry. All right. And it's going to be 10,000 times smarter than people in 10 years. Well, once we break through that count to 3 barrier, who knows? There's nowhere to go but up from there. Now, I have a bigger theory. I think Masa-san over at SoftBank is hopelessly levered up into a stock market bubble. He senses that bubble is about to pop, and he's worried. And so, like an Elizabeth Holmes at Theranos, who was just trying to change the world with her fake baritone voice, the statements get more and more ridiculous, more and more delusions of grandeur, if you will, as the bubble popping gets nearer and nearer. And keep in mind, guys, the Japanese yen is collapsing right now. I mean, we're at about almost 159 yen to the dollar right now. It's down again this morning, or should I say the USD JPY chart is up again this morning, showing further weakening in the yen. And, well, I hope SoftBank accurately or adequately hedged their currency exposure, because that's a big Japanese firm. Remember, we were just talking about a Japanese bank possibly blowing up yesterday in Norinchukin, who was back in the news yesterday, coincidentally. Norinchukin saying, hey, our losses could get bigger, saying what everybody knows, that 500 trillion or 500 billion yen in losses that turned into 1.5 trillion yen in losses. Well, we reserve the right to make that number bigger if interest rates rise. And, well, banks blowing up does have a way of sending interest rates higher. So there's a lot to keep an eye on overseas. And one more story coming out of Asia this morning is China is telling their regional banks, you guys better get your act together with your wealth management products. Now, if you've been following the collapse of Evergrande over in China and the real estate bubble, wealth management products is this shadow banking sector. They're basically bonds, right? You park your money with our institution, and then we go out and invest it for you, and then we'll give you 10% interest, 8% interest. They always promise an abnormally high interest rate, which is usually your first indicator that you should run and not send these people your money when they promise you returns like this. Well, these are unregulated debt securities, and the Chinese government is telling their regional banks, like, hey, years ago we told you, you better knock this stuff off. You've got until 2026 now, a little over a year and a half, to get your act together, a little under a year and a half now. They're requiring these banks to set up their wealth management products within subsidiaries. In other words, you got to get this garbage off the balance sheet of your bank, where it doesn't come with the implicit guarantee that the government will insure if those products go belly up. So they're forcing banks now. They're giving them a time limit. You got a year and a few months. You got to get that stuff off your books and silo it so that when it blows up, it doesn't take the bank with you. And again, it's just another indication that the Chinese regulators have a mountain of problems to deal with. That debt bubble in China, it's not something that's going to be fixed with these little half measures and small little stimulus efforts that China's been trying to make. There's still a massive deleveraging that has to happen over there. And wealth management products is just one of many of those lit fuses in the Chinese economy that we got to keep an eye on. Why don't we shrink my big melon of a head and let's see what's happening in the market this morning, shall we, everybody? And right now we are looking at the Fear Greed Index. And I don't know, guys, does this feel like a fear-driven market to you? I mean, stocks are making new highs on seemingly a daily basis. Yesterday, we didn't hit a new high in stocks yesterday. This market must be so terrified. Day in and day out, new all-time highs. NVIDIA, briefly the most valuable company in the world, trading at 40 times sales. And yet the Fear Greed Index is saying we are fear-driven right now. One of these things is not like the other. Again, something seems really out of place in this market. This market is drunk on enthusiasm. And yet the Fear Greed Index is saying fear. It's one of those things that should give you pause before you pile in YOLO and call options. Meanwhile, the S&P 500 is just barely back into positive territory now, up 0.1 points or 0.00%. We've got the Dow is now in positive territory as well. Two of the three indexes were negative a few minutes ago, but now the Dow is positive, up 15.7 points or 0.04%. And the NASDAQ is up 0.11%, 21 points to the upside. So we got all three indexes in the green now. I guess we need to switch the thumbnail back to the bull for today. Meanwhile, the DXY is higher again this morning, 105.73, up another 14 basis points, although off the highs of this morning. So we got a stronger dollar once again. And interest rates are moving a little bit lower this morning. We've got the 30-year Treasury at 4.378. That's down 1.5 points. The 10-year's at 4.229, down 2 points and change. The 2-year's at 4.705, also down 2 and change. And the 1 month is actually back up about 2 basis points here at 5.32%. We've got mostly lower bond yields this morning. Now looking over at the metal space, we have got spot gold at $23.63. That's up about $3 this morning, doing okay. Silver, on the other hand, spot silver at $30.29. That's down 44 cents this morning, or about 1.43% lower. Silver had a great day yesterday, giving back some of those gains this morning. Copper is down 2.25% for July futures. July platinum futures up 1.75%, and September palladium futures up 4.75%. I heard some rumors about something going on with palladium and Russia and possible some kind of embargo. I haven't had a chance to pull on that thread myself, but that might explain why palladium is up so much this morning. And WTI crude oil for August delivery at 81.55. That's up about a quarter this morning, 1/3% higher. Now looking over at the silver chart, again, we had a nice day yesterday. Big green candle up. Caught a nice bounce off the 50-day moving average here where we were bouncing for a couple of days. Now we're giving some of that back today, about half of the gains from yesterday. So shiny still looking pretty good this morning, but giving back some of those gains. Bitcoin continues its little sell-off of the last 2 weeks or so, trading at $63,753 on Coinbase. That's down $1,091, well off its highs of around $71,000 from 2 weeks ago. We're hovering around the 50-day moving average for a couple of days. We lost that one on Tuesday, and we challenged it again yesterday, hit our head on that one, and falling again. So technically, Bitcoin is not looking so good here. Now, let's talk about the main story this morning, or one of the main stories. Wall Street's $5.5 trillion triple witching to test market calm. And again, guys, this story, we've heard this one before. We've spoken about these witching events and all this confluence of expiration. So I don't want to be too fuddy here. The only thing is, with the market so offsides long here, maybe this ends up being a thing today, maybe not. Just keep an eye out for it, especially in that last hour of trading. Friday's U.S. options expiration may provide volatility-starved traders with some short-term market swings. The so-called triple witching will see some $5.5 trillion worth of options tied to indexes, stocks, and exchange-traded funds fall off the board, according to an estimate from options platform Spot Gamma. As the contracts disappear, investors will adjust their positions, adding a burst of volume capable of swinging individual holdings. Now, again, the big risk here isn't so much the options themselves dropping off and expiring. It's what do the hedged market makers do with those big hedge positions that could actually move some of these stocks, right? With everybody piling in the call options in companies like NVIDIA, the market makers go out, they buy the shares so that their risk is neutral. Well, all those options are going away at the end of the day today. So unless everybody exercises their options demanding those shares, well, then the market makers are going to go sell those shares, unwinding their hedges. That could create a wave of selling, and that's the risk here. Now, the quarter's expiration comes as implied volatility on the S&P 500 options is holding near the lowest level since before the coronavirus pandemic, with the U.S. benchmark index riding the surge in shares of NVIDIA and other artificial intelligence-linked companies. Now, that's another risk here, is because there's a lot of people are out there doing that short vol trade, which has a reputation for blowing up in magnificent, spectacular fashion. Everybody's picking up pennies in front of the same steamroller. And if you get a little bit of move in volatility, when everybody's short volatility, it's like that steamroller suddenly goes into overdrive and starts moving a lot faster, and people can't get out of the way fast enough. So that's another risk that's out there today. Again, we've been here before, and it's been a nothing burger. So just be aware of this. This time around, the expiring value tied to calls is some 11 times greater than the notional value of puts, according to Brent Kochuba, SpotGamma's founder. That's a stretch from last quarter when the ratio was closer to 5-1. And again, this was a non-event last quarter, so keep that in mind. The widening gap signals growing demand for upside exposure alongside shriveling desire for puts. It might also prime highly traded benchmarks and stocks for minor dips lower on Friday and into early next week. He said, the options complex is too stretched to the upside, said Kochuba. Things will start to consolidate and the market will get a little more volatile. While mom and pop investors may hardly notice the events, dealers certainly will. For them, large expiries means tough choices, roll or offset positions or close them out entirely. The twists and turns can spur added gyrations, particularly in the final hour of trading, known fittingly as the triple witching hour. So brace for fireworks in the last hour of trading. It might be a whole big nothing burger, or maybe we get a spike in volatility. Conditions are prime for that volatility spike. That doesn't necessarily mean it happens, though. Also going on this morning, one of the worst earnings stories I've ever read here in Market Watch. CarMax profit beat offsets revenue miss as stock rises. And guys, we've got a nice bullish positive headline there, and it just gets worse and worse the whole time through the rest of this article. Like, that's as good as it gets, the headline. Everything else is just junk from here on out. And it shows how this market will put lipstick on any pig that walks in front of it. Sales fall, but company is encouraged by more affordable prices. Wait a minute. Companies encouraged by more affordable prices. They sell cars, and they're encouraged by the price of the cars going down? Okay. All right. Good luck. CarMax net income for the 3 months ending May 31st dropped by about a third to $152.4 million or 97 cents a share from $228.3 million or $1.44 a share in the year ago period, which included a legal settlement payment of 28 cents a share. So CarMax had some one-offs in there that were making these numbers a little worse, but still a 33% drop in earnings and profit. That's terrible. The FactSet consensus estimate called for CarMax for a profit of 95 cents a share. So technically it's a beat by 2 cents. I guess that's why the stock was up. Revenue dropped by 7.5% to $7.11 billion from $7.69 billion in the year ago quarter, and missed analyst estimates for $7.16 billion. So we got a top line miss. Prior to Friday's moves, CarMax stock had fallen 7% in 2024 compared to a 14.8% gain in the S&P. CarMax reported a 3.1% drop in retail used unit sales, while comparable store unit sales declined by 3.8%. So they're selling fewer cars, and the price of those cars is falling. CarMax's purchases of cars from consumers dropped by 13.7% to 279,000, while purchases from dealers rose by 70% to 35,000. Those dealers have a lot of inventory that they're unloading on CarMax here, apparently. Total wholesale revenues dropped by 17% as the average wholesale selling price fell by $900 per unit. We'll see that in a minute in the Manheim Used Vehicle Index. That's a 10.3% decline. The number of wholesale units also fell, selling fewer cars for less money each. Looking ahead, CarMax said it was encouraged by first quarter trends, such as continued year-over-year price declines, improvement in vehicle value stability, and ongoing growth in upper funnel demand. I'll be honest with you, I don't know what upper funnel demand means, but a company who sells cars telling us that they're encouraged by the decline of car prices, that's not how that works, guys. That is really just not it. And then the coup de grace, the grand finale of this article, that just goes to show you we learned nothing from the GFC. The company said it expects incremental growth in its financing income after it launched its first non-prime asset-backed securitization deal as part of an expansion into its securitization program, said CEO Bill Nash. Non-prime asset-backed securitization. They're making lousier and lousier loans to people with lower credit scores who can't pay them back, and they're packaging those loans into bonds and selling them to investors. And they're doing it because the product that they're selling is worth less and less, and they're getting increasingly desperate to drive their earnings. There is so much bad in this article, I don't even know where to begin. But that non-prime asset-backed securitization, first of all, they're inventing, this is stupid word salad here. We can't say subprime because everybody remembers subprime equals bad from 2008. So instead, we're going to say non-prime because that doesn't bring back all that 2008 bad juju, even though it's the same freaking thing. And ultimately, who's buying these asset-backed securities? Oh, man, do we need to go dig into that? Do we need to pull the thread on that? My money is on your pensions, if I had to guess who's buying this stuff. It always ends up in pensions. That is the dumping ground for the toxic sludge of Wall Street. And CarMax stock, though, it's up 2.8%. I guess the market was just expecting even worse because there really wasn't anything good in that article other than the headline and that 2-cent EPS beat despite a big revenue miss. Stock is up almost 3% this morning. And we were talking about those falling wholesale prices. Check out the Manheim Used Vehicle Value Index. Guys, this is one of the biggest contributors to the decline in CPI. Now, again, a decline in CPI doesn't mean prices going down in CPI, although prices for used cars absolutely are going down year over year, even though CPI is still going up. But this is showing that car prices, they have fallen big time. Now, the Manheim Vehicle Value Index, this tracks wholesale prices. This is what the car dealerships are paying for big bundles of cars. But you can see the wholesale prices, they're down. The index was around 255 at the beginning of 2022. Now we're down around 196. So used vehicle prices are in free fall. New cars are starting to play catch up. They're still a little bit behind. But no end in sight here. I mean, for CarMax to say, oh, we're encouraged by this trend. How can CarMax look at this chart and say they're encouraged by this trend? I don't know. They're just going to put some lipstick on that pig no matter what happens. Also, more bad news going on in the car industry. CDK tells car dealers their systems will likely be down for days. We got another cyber attack, this time an auto dealership. The cyber attack crippled thousands of retailers starting on June 19th. CDK is among the top providers of dealer management systems. This one's just breaking this morning here, guys. Auto retailers are likely to be without software services used to run dealerships for several more days following a second major cyber attack at CDK Global, whose systems first went down on June 19th. At this time, we do not have an estimated time frame for resolution, and therefore our dealer systems will not be available likely for several days, the company said in communication sent to customers on Thursday that has been reviewed by Bloomberg. By the way, shout out to my man Tig the Mod, who sent this one over to Mish through Discord this morning. Thank you, Tiggy, for the heads up on this story. This is a good one. CDK informed customers Thursday of the second cyber incident, which occurred late the prior evening and led the company to shut down most of its systems for a second day. On what otherwise would have been a busy U.S. holiday for businesses, dealers reliant on CDK were unable to use its systems to complete transactions, access customer records, schedule appointments, or handle car repair orders. The company serves almost 15,000 dealerships, supporting front office salespeople, back office support staff, and parts and service shops. The outage also extended to hundreds of dealerships in Canada, with retailers relying on pen and paper to work on deals, said Tim Royce. president of the Canadian Automobile Dealers Association. Those transactions will eventually need to be logged digitally once the systems are back online. He said there's going to be a bit of a hangover from this incident. So we got software systems down at thousands of car dealerships across the U.S., even as CarMax is saying the auto industry is in shambles. Not a really good time to be in the car business, is it here? Keep an eye on that story. And then one of the other ones we got this morning, SoftBank CEO says that AI is 10,000 times smarter than humans and that will come out in 10 years. This is a ridiculous talking point. When you see big, giant numbers at 10,000 times, number I just pulled out of my ass for the purpose of this talking point, to me, this reeks of desperation from Masa-san. SoftBank, I just want to set the table, guys. SoftBank owns 90% of the shares of ARM Holdings. It's their single biggest holding, and they have borrowed against those shares to make other investments. All right, so SoftBank is a very highly leveraged investment company. They're overexposed to AI in a big way, and now they're out making statements like this. And Masa's getting like awful existential here. Listen to some of this stuff. Artificial intelligence that is 10,000 times smarter than humans will be here in 10 years, according to CEO Masayoshi Son. He said on Friday in a rare public appearance during which he questioned his own purpose in life. And I guess that happens to a guy whose firm might be about to blow up in his face. Son laid out his vision for a world featuring artificial super intelligence, or ASI, as he dubbed it. Oh, we squeezed super in there. You know, it's like non-prime. It's a totally different thing because we changed up the wording, and now it means something totally different. No, it's just AGI, artificial general intelligence. That's what he's talking about. Now, listen to this speech that he gave. Now, this maybe something got lost in translation here, but he's saying, 2 years ago, I'm getting old. Rest of my life is limited, but I haven't done anything yet. And I cried so hard, Son said, suggesting he feels he hasn't achieved anything of consequence to date. He added that he had now found SoftBank's mission, which is the evolution of humanity. He also said he's discovered his own purpose in life. SoftBank was founded for what purpose? For what purpose was Masa-san born? It may sound strange, but I think I was born to realize ASI, or artificial superintelligence. I am super serious about it, Son said. What the heck is this guy talking about? For 10,000 times more intelligent than people. I'm having an existential crisis. What have I done with my life? I was put here on this earth to make computers replace human beings. I don't know what this guy is talking about, but I can tell you there's a lot of people out there. A lot of people are starting to talk about this AI bubble. And if we end up being right about this AI bubble, then Masa-san's firm is going to go belly up, leaving him with nothing to show for his life. Maybe that's why he's talking like this. And look, guys, look at the chart of the Japanese currency in decline here. If SoftBank has not hedged its yen exposure, then you better believe that firm is in big, big trouble. The Japanese yen at 158.99. Are we going to see 159 here? We are now higher than the close, not quite as high as we got when the Japanese intervened a couple of weeks ago. You know, we got as high as 160 intraday before the Japanese finance ministry intervened and started dumping dollars. But we're higher than we were the day before that, and we're higher than we've been ever since. The Japanese yen continues to collapse here. And remember, guys, this chart moving higher. This is the yen falling versus the dollar. And keep in mind, other Japanese financial institutions, SoftBank isn't a bank. It's an investment firm. It's pretty much a private equity company. But plenty of things blowing up in the Japanese financial system at the moment. Remember Norinchukin from yesterday? Norinchukin CEO says expected loss could change with the market. Yeah, Captain Obvious here. I know losses could change with the market. So what's the whole point of this? The whole point is, that unrealized loss that we're going to have to realize. Remember, we told you it was only 500 billion yen. Whoops, our bad. It's 1.5 trillion yen. And I feel compelled to remind you that that number could get even bigger. That's the point of this story here. Norinchukin Bank isn't ruling out further gyrations. That's the second mention of the word gyration in this stream today. That was not planned. Why is everybody gyrating? I don't know. When things start gyrating, I get nervous. It's all right. As long as they haven't started to shake and shimmy, we'll be fine. Norinchukin Bank isn't ruling out further gyrations to its soured bond investments after the firm earlier this week warned losses may swell to 1.5 trillion yen, triple an estimate made about a month ago, Asked whether the bank's expected losses may exceed that number, CEO Kazuto Oko said it depends on the financial environment in comments to reporters after the bank's annual general meeting. Look, guys, this shouldn't be news. We haven't sold it yet. So, yeah, your losses could get bigger or they could get smaller. But the point is they've tripled in the last month, so we know which direction those losses are heading in currently. So you better believe things could get a lot worse for Norinchukin. Keep an eye on that one. That is a big deal. The fifth largest bank in Japan, 3 times the size of Silicon Valley Bank in an economy that's a lot smaller than ours. And last one of the day, let's talk about this one over in China. China orders small banks to curtail wealth management business, sources say. Look, I'm going to breeze through this one because we're getting a little long in the tooth here. But the order is for the Chinese government is ordering regional banks by the beginning of 2026. You guys need to get all of your wealth management products packaged up into a subsidiary and off of your bank's books. It would make the banks standardize their wealth management business and to invest the funds into capital markets in a compliant way. They also aim to establish a clear separation between banks' wealth management operations and their other businesses to eliminate any implicit guarantee that these investment products would be bailed out by the banks if they perform poorly. Since the 2018 regulation, China's major state-owned banks and large national commercial lenders established separate wealth management subsidiaries, but most smaller regional banks have lagged behind. The regulators are getting serious about containing the risk from this collapse in real estate. And I just want to say thank you so much. I saw some people buying memberships earlier. Who was that? Oh, thank you very much, Harmon Air LLC. Happy payday. Well, happy payday to you today as well, sir. And happy triple witching day, if that ends up being a thing. I don't know. But thank you for the super chat. And thank you to M&J for gifting 10 Nobody Special Finance memberships. I appreciate the support of the channel, M&J. And Jim Watari is out there doing the same thing, gifting 10 memberships. So to you 20 fortunate melonheads who have been gifted a membership by M&J or Jim Watari, be sure and drop a comment thanking them for the membership. Thank you, guys. I appreciate the support of the channel. That was very nice of you. And Galmers44, who's calling for the tinfoil hat. Okay, merchandising. Here we go. The tinfoil hat is on. Jack, tinfoil hat time. Do you think the FDIC has a bank failure calendar already set up? The closures will all be on Fridays after market close. That's the thing there. I think you nailed it at the end. I don't think necessarily there's a calendar like on this day will fail the bank. But if the bank fails on a Tuesday, you're not going to hear about it until Friday. They'll let the bank, the bank doesn't actually fail until they run out of assets to sell and there's still demand for withdrawals. We can see a bank failure coming way before it fails. So the FDIC will take the bank into receivership before they run out of assets to sell. And so the FDIC does have the flexibility to wait until a Friday, unless it's like full on people banging on the doors demanding their cash right now, like 1929. So is there a calendar? No, I don't think they have a specific calendar, but they definitely have that flexibility to plan the failures or to announce the failures. I don't know, say a holiday weekend before everybody leaves for summer vacation. Oh, 4th of July coming up. Yeah, something like that. The other thing I would mention is keep in mind with like that Republic First failure, the one that just failed a few months ago or a few weeks ago here, that bank, the writing was on the wall for months. I mean, that bank was really, the FDIC was negotiating a takeover of that bank since September. So it was like for 5 or 6 months, the FDIC knew the bank was insolvent and they were behind the scenes negotiating the sale of that bank's assets, but they didn't take it into receivership until the sale had already been signed. And then they immediately took it into receivership, executed the sale, and then handed the assets off to Fulton Bank, who ended up buying most of Republic First assets. So do they have a calendar set up? No, but they definitely can play games with the timing and the announcements. Absolutely. Don't necessarily need the tinfoil hat for that one, but the FDIC will definitely play games like that. Thank you very much, Gomers, for the super chat and the support of the channel. And thank you to Uncle Fedster. Happy Friday, Jack. Subprime, non-prime, Optimus Prime, Amazon Prime. Cars are always too expensive. I'm right there with you. Cars are pretty expensive. I'm a simple guy. I pay cash for my cars. I like a good new used pickup. I buy a new used pickup and I run that sumbitch into the ground. That's how I roll with cars. look, I work at home. I answer fire calls. I don't really get out that much. I don't need that many miles. I don't have a long commute or anything. I just like my little mid-sized pickups. So I agree, cars are too expensive. There's so much crap in cars these days, all this electronic, computer-driven garbage. Why can't we make an affordable car for a change? Like, there's no reason you shouldn't be able to put a relatively safe car on the road for under $20,000. If you get rid of all this stupid bells and whistles that don't really add any driver value, really, they just distract people who are driving their cars. Why won't the dealerships? Well, I know why the automakers won't do it, because they make money on expensive cars. But there's definitely a market for an affordable car. Absolutely. Thank you very much, Uncle Fedster, for the good vibes this morning. And thank you, T.A. Chapman, for becoming a Melonhead member. Welcome to the elite few, if you will. And thank you to Metal Seer, who says Melonhead is 1,000 times smarter than almost anyone. No, not 1,000 times smarter than almost anyone. I can tell you I'm 1,000 times smarter than artificial intelligence is right now. You know, the one that tells you there's 2 R's in strawberry, and the one that tells you to glue your pizzas together and eat at least 1 rock a day, according to the geologist. I'm smarter than that. And apparently that is going to be 10,000 times smarter than me inside of 10 years. And, well, I guess that's accurate, because if I keep reading stupid talking points like what Masa-san just said about his existential crisis and AGI getting so smart, well, I'm going to keep getting dumber and dumber the more of that crap that I read. So maybe it's not that AI is getting so much smarter. Maybe it's that we're getting so much stupider. And that's why AI is going to be so much smarter than us in 10 years. Hey, I'm just throwing it out there. We're just thinking outside the box. Thank you, Metal Seer. I appreciate the super chat, the support of the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Watch out for that last hour of trading today, guys, that triple witching. We'll be live at 3:15 p.m. Eastern time this afternoon, so come check it out live on the air with us. Thank you to all my super chats and all my channel members for supporting the channel. I got links down below to all that good stuff. Appreciate you guys. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.